Okay, we're going to see about looking at sales tax issues now. We spoke about business tax before. Just as a quick background, sales tax is a tax on a transaction, particularly usually transfer of item or services from a seller to the buyer. We had to point out in this seminar that it's not the same as a VAT tax, which is popular in Europe and applied to Israel as well. And a VAT tax is basically the big difference, just for the record, is you start with raw materials, you go to manufacturing, you go to a distributor, you go to a store, retailer, and then finally you go to the customer. And the way the VAT tax works is the tax applies once here, 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 and finally here. So there's a tax, it's taxed 4 times because there's 4 quote value added events that occur. That's what value added tax, what VAT stands for, value added tax. So there's a value added to the production line, so to speak, here, and then here. Everywhere you go, there's a value added. So the wind-up is that you wind up having the tax applied 4 times. Now, the rate of the VAT tax is not applied 4 times because each person gets a credit along the way for what was paid by the prior events, by the prior transactions. You can read about it in Wikipedia. They do a pretty good job of describing it. Okay. But we do know that a sales tax is similar in the fact that it is a tax on transaction, but only at the bitter end, so to speak, when it's sold to the final consumer. It's based on a gross basis, how much of the sale was, and we learned most states do it. It could be that in some states the services are not subject to sales tax. Maryland is one where there's very few services. There are some, but very few that are subject to sales tax. Some states tax many services. Now, in our discussion, hopefully what came out, and this is a good reason for doing this review, is that when it comes to Nexus, do you have a sales tax responsibility in a particular state? As a background, before we look at the detail, the Nexus issue in sales tax is similar to business tax. Are you doing business there? If you're doing business there, then you have to collect the state sales tax. If you're doing business in another state, you have to collect the sales tax. So it's a question, do you have to collect and then pay it to the state? And in order to have to do this, you have to have Nexus. We go back to that issue. You have to have Nexus. The ultimate goal of this review course, or session rather, video, is to just let you know that what should have come out of your understanding is that Nexus, when it comes to sales tax, is definitely a broader definition than for income tax purposes. Physical presence certainly applies. Agency nexuses can apply. You don't have protection in most states just for solicitation. In other words, you don't have protection under 86-272, Public Law 86-272. Even though we learned in the last video that businesses are sort of ignoring 86-272 by claiming the economic nexus, the claim of economic nexus could also be argued by some lawyers as not protected by Public Law 86-272 as a different issue, and they're not violating 86-272. What that means in terms of legal arguments and how to write that and describe it, don't worry about it. Just understand this major point, which is that for income tax purposes, because of Public Law 86-272, if you have sales of tangible property and all you're doing is soliciting orders in that state, you probably are still protected by 86-272, unless the state can claim economic nexus, which when they do, then maybe it, I'm right back to where I started. Maybe when they do that, it's as if they're ignoring 86-272. So the lines are getting blurred. Back in 2012, economic nexus that's when we gave this seminar. Back in 2012, economic nexus was just beginning to surface in the court systems and get argued. In some states, the economic nexus was losing. Some states, it was winning, and it's still quite up in the air as to what it means and whether it can be applied to business taxes. So I would say that the current way to get out of this course and understanding is that generally speaking, sales tax nexus is easier to come across. It has a broader definition because 86-272 is still in the books, has some limiting power, but the lines are really getting blurred. Here in 2016, it's hard to say here in 2016 that this is really arguable. It could be argued that at this point in time, the nexus is easy to get. All you have to be doing is some kind of business in another state, and if the state law has been modified in such a way to try to capture you, you could be captured. Back in 2012, we began seeing the click-through nexus and the affiliate nexus idea, and now we know, and we knew it then, that it was going to be upheld as being good in some states. But let's just go for it and we'll see later. So just to, again, for your understanding, to make sure you understand, remember that nexus makes sales tax taxable in a state if you have it, just like we learned about income tax. If you have nexus, you're subject to income tax. If you're subject to nexus for sales tax, you got to collect the sales tax in the state you're doing business in. And what we were doing here is we were explaining to the Israel companies doing business in America and the United States that they've got to comply with sales tax laws in the state they're doing business in based on whether they have nexus or not, because you can't go back to the customer to collect what you didn't collect. What will happen is that the business will get audited. The state will say, you didn't collect sales tax and you owe it. The sales tax was really supposed to come from the customer to the business. The customer is supposed to give the dollars of sales tax to the business. The business didn't collect it. The state goes to the business, does the audit, says you owe the money because you were supposed to collect. Now, can the state really go to the customer to collect after the audit? I doubt it. And it would be bad business to do that. Can you imagine you get a knock on your door from some company saying, like Dunkin' Donuts comes to your door and says, we didn't collect sales tax from you for that $5 sale you had 2 years ago. We'd like to collect the tax now. You'd probably shut the door on them. Even though it's small dollars, it's crazy. So this was what we were seeing back in 2012, and now we know it really has passed even more than 20 states, because it's not just proposed, it's actually passed, because New York won the click-through nexus. New York won, and the click-through nexus we went over in class, but it's basically saying that if Amazon is selling on the internet and they have any person in that state who's involved as an affiliate, and whatever that means, you have to look to each state law to find out. But if there's somebody in that state as an affiliate to the internet sales, it creates the nexus for sales tax. We talked about what an affiliate means when we were dealing with this issue in class, so you might want to go back and take a look at that or look it up on the internet to further understand it. Now, some of the other things that are going on and has happened and has now been held to be constitutional. So I'm going to actually skip this slide to describe it on a blank page. What else has been going on in addition to the click-through nexus and for income tax purposes, the economic nexus? Another thing that's been happening for the sales tax is the following. Sales tax has to be paid by the customer. And of course, when we call it at this point, we're talking about use tax. So the proper definition of what the customer is supposed to pay is use tax if the sales tax wasn't collected by the business. So if a business came in from state A to state B, but the business here in state A said we don't have nexus, so we're not required to collect sales tax, the customer is supposed to pay the use tax, which is the equivalent, the complement to the sales tax. If, on the other hand, company A over here has nexus here, it will collect the use tax and the customer doesn't have to pay it. And so that's the whole argument on who's required to collect it or pay it. If there's nexus, then this company A will have to collect it from the customer when it makes its sales. We don't have too much more to do, but let's stop here in order to keep these relatively short, and we'll pick it up here next time.